Yes, we're here. So welcome to everybody. So I'll wait a few minutes until usually it takes like 5 6 minutes until everybody is here. Yes, so these videos will be a combination of course and also of technical analysis and also how, market analysis and where you basically can do your trades. So I did some of my trades just before I entered this or made this live stream. And some of the companies I've added to my list are AMD, Waste Management, we have Walmart, Apple, and Tesla. So the market is, well, having a quite big pullback this week. Today and also on, I think it was Wednesday, we had it 2 to 3% in the Nasdaq and in the S&P 500 and Dow Jones. And today that is continuing. And most of you just look over here, everything is technically red. There are two companies here. There are in the green, and that's probably because of Reddit or something like that. But other than that, everything else is in the red, and this just gives the opportunity to buy some of these stocks very cheaply. And technically, you should go for the best stocks that you can technically buy and as cheaply as you possibly can buy. So for the course, I have set out to describe what basically moving averages are. So people that have not been participating in this, you will probably be a little bit confused of everything that is on this screen if you haven't seen technical indicators before and so on. But these are the indicators that I use when I do my analysis. I of course use eToro's platform when I do my video, my technical analysis, and that's just to keep it simple and practical, because moving from one platform to another and so on, it takes just extremely a long time just to move from one platform to another and to clip the videos and so on. So I will have the technical analysis and live streams and so on TS2000, because it is technically more fun. You can do more with this program than you can do with eToro. And I will also do on Wednesday publicly on YouTube. I haven't done that yet. I'm still working on how to basically do that, but that is basically a online technical analysis on Wednesday before the US market basically opens. And that will also just focus on stocks, indices, and foreign exchange or currencies, because that is the only thing that TC2000 can offers at this point. It doesn't offer the ability to trade stocks, now to trade commodities and precious metals and so on. So indices, foreign exchange, and stocks, but that is also more than enough. So if you look at these lines here, this is what we basically call moving averages. I have 7 of them on my screen. I can basically go to the big screen, then it's easier to see them. So these are the moving averages that I use, and you can see up on the top here what kind of moving averages I use in my technical analysis. So we have the red one, that's the 50 moving average. We have the blue one, that is the 100. Then we have the orange one, that is the 40 exponential. Then we have the yellow one, that's the 20 exponential. Then we have the pink one, this is the 200 moving average. 300 moving average is also blue, and the gray one is the 250 moving averages. So just practical, in order to calculate a moving average, you need, for example, if you want to calculate the 50 moving average, you need 50 days of data. So closing price, for example, of a stock or a commodity and so on for 50 periods or 50 days. If you're doing it on a daily chart, then you have 50 days, and then you basically take the average of those 50 days, and then you get one moving average. And then you add for every single day, you can add the average for, and so on and so on. And what you basically get is a lagging line of you can say an indicator. And what you can use these lines for is basically to determine whether or not you are in an uptrend or you're in a downtrend, or if you're running into resistance or support. So in essence, you don't really need any other indicator except for moving averages. You could just start looking at the moving averages and start trading, because it is probably the best in the technique there is, that's basically the moving averages. So we have Tesla here. It's one of the stocks that I just bought for my portfolio for the long run. I have just been waiting for Tesla to basically drop underneath the 20 exponential moving average in order to enter this market. As you can see, the last time we were underneath the 20 exponential moving average was basically all the way back here in November. Since then, it has been trading upwards, bouncing off the 20 exponential. So when it basically broke the 20 exponential, I thought, yes, this is probably the time to enter this market in order to buy it cheap. It will probably drop, but it doesn't really matter when you hold it for, or you're planning on holding it for 3 to 5 years or probably even 10 years, then it doesn't really matter when you enter. But I wanted to basically get it as cheap as possible, as it was falling now. So if you want to buy this as a day trader, it could fall all the way down to the 40 exponential. That is possible. So it could fall additional $50. That is possible. But in my case, when I'm buying it for a long term, it doesn't really matter. So if you just take this example here. Here we clearly see that the Tesla is an uptrend. So you can see it is an uptrend. The slope is positive, and you can see we're bouncing off the 20 exponential. So, and we're trading above the 20 exponential. So in a downtrend, you're basically the 20 exponential is not supportive. It is acting as resistant. So here is supportive. You're basically rally, pull back, bounce off, and so on. So clearly, you can confirm that we are in an uptrend. And one of the main rules of trading is that you technically never bet against an uptrend. So we are an uptrend here, and therefore you should never ever sell a Tesla stock at this point. You should wait until it basically goes to support and then buy. So for example here, we haven't reached support yet. So we have broken previous support, which was the 20 exponential. We could estimate that the 40 exponential would be the next support. But given the nature of this stock particularly, people will just look at this, they see Tesla fell by 5% today, let's buy. And then they don't really care where the moving averages are and so on. Most of the time, it doesn't make any sense to the Tesla stock, but it's a very popular stock, and the growth opportunity for this company is just enormous. It'll probably triple in the next few years. So we can take an example of a stock that is basically trending downwards. We'll take waste management. So you can see it here. Taking the first. So this is the reason why. Yes. So if we go to back to all the way to the start of the coronavirus, that is here in the middle of February. This is basically the 19th of February. Waste management hit its all-time highs, which is roughly here at $126 a share. After that, it broke below the yellow line here and the orange line and the red line and every other line and started trending underneath for example, the 20 exponential moving average. You can see it right here. So we fell, bounced, touched the blue line here, and this blue line, instead of acting as support as it would in a uptrend, it is acting like resistance. So we rally up towards the blue line here, and then we break down. Rally, break down, rally, and then we rally above the 20 exponential all the way up towards the orange line here, and then we break down. So clearly here, we're in a downtrend. We're trending actually underneath these moving averages and not above like we are doing here. So moving averages, you can basically use them as to analyze whether or not we're in an uptrend or in a downtrend. And as I said, when you're in an uptrend, you don't sell. That's just not a good idea. You should wait for the best opportunity to enter for a buy. And when you're in a downtrend, you technically never buy. You basically wait until the market rallies up towards for example, top here, and then sell, and then you basically wait until it rallies up, all the way up here, and then you sell again. So buy in uptrend and sell in the downtrend. That is the best way to earn money. Otherwise, you can get stuck in your trade and you could lose quite a lot of money. So if we look at, for example, Apple, which is doing horribly today, we can take it as an example of how you can use moving averages as an indicator for where there is resistance and where there is support. So Apple has been in an uptrend for a very long time. Basically, since we bottom in the market here in the middle of March, we have been in a massive uptrend. So we have rallied, seen these parabolical rallies here and break down, but all in all, we have been in an uptrend. We were in a downtrend here in the beginning when the coronavirus hit, and otherwise since the 2019 we have also been in an uptrend. So that basically means that for the majority of the time, the candlesticks here have been trading or trending above the moving averages. Very few instances where they have trading underneath. So recently, the blue line here has been major support. And we can see that because we have two examples here where the price of Apple has fallen towards the 100 moving average, which is the blue line here, and then bounced. Tested it again and then bounced. So we are very, very certain that if we get towards the 100 moving average in Apple stock, that is a major buying opportunity. It's just roll up the truck and buy as much as you technically can. If it goes wrong, have a stop loss underneath so you don't get caught in this trade. Otherwise, 100 moving average, we have two examples here. Otherwise, it doesn't even get close to the 100 moving average. So the 100 moving average is very, very supportive in Apple stock. Another line or other moving average that is even more supportive is this one, which is the 300 moving average and the 250 moving average. We tested it here. This was basically in the where Apple fell in when coronavirus hit. It topped here in mid of February and then fell all the way down to $53 a share. So this was in the end of March where we bottomed, and we basically ran into major support here at the 300 moving average. And then since then we have rallied. And we haven't tested the 300 moving average several times in the past, but every time we have, it has rallied from that point. So 300 moving average, that is a long-term investment. It's just buy as much as you can and just hold it forever almost. 100 moving average is very similar. You can basically hold this for months and weeks, and you will earn quite a lot from that trade. And then you have the short-term trades. That is basically when it bounces off the 20 exponential moving average and the 40 exponential moving average, and also the 50. So today we entered a buy-in here just at the 40 exponential moving average. So entry was here. I put a stop loss underneath the 50 moving average because I know if it basically breaks the 50 moving average, then it's going to drop all the way down to the 100. But it can always overshoot the 50 and then go back. We have some example of it, for example, here, that it overshoots the 50 and then pulls back and then re-rally. So it's quite unfortunate if it overshoots, hits the stop loss and then rallies. So you should have a stop loss a little bit far away from the 50 moving average, and always be ready to extend it a little bit, not too far. It's like you don't move a stop loss from here all the way down to here, because that is usually a very bad idea. You should technically just let the stop loss go if it starts falling parabolically, and then enter the market again somewhere lower. So we enter the market here, and our target are these previous highs here of 145 with a stop loss right here. And the reason why I entered here is because I know that the 40 exponential has been major support in the past. So this will probably take a few weeks until we get to the highs again, but that is a profit taken of roughly 11.5%. So a fairly good trade. So we could see something similar to this, bounce off the 20, bounce out of 20 until we get back to the highs. So you can see an example here. We fall from the highs here all the way down to the 40 exponential, find support, and then we rally all the way to these highs. And that's a rally of roughly 13.6%. So that's how you can basically use the moving averages in order to determine when to enter a market, when you find support and when you're supposed to enter a market. So we were already in green here. It is pulling back now, as technically most of this was pure fear due to a vaccine from Johnson & Johnson. It was not as good as people were hoping for. But seriously, there are several vaccines out there. We have been hearing vaccine news for almost months now. And the market only needed an excuse in order to pull back. We have been rallying ever since the beginning of November, since basically back here. Apple has been rallying all the way to these highs. That's a rally roughly 34%. And since then, we have fallen roughly 11%. So still, from the beginning of November, when we started this rally, until now, we're still up roughly 18-19% compared to where we were in November. So this fall is big, of course, but seriously, we could actually fall even further from here. And then we have all the Reddit news and so on. So this is not going to be a catastrophic decline like we did see back in March, where we fell roughly 34%. So that's not what we're going to see. This fall was also just as big as the coronavirus. This was roughly 24%, and it technically didn't make the news. So this is a fall of 11%. We saw one here as well. It gave us a major buying opportunity as well. So fall roughly 9%. And then you just enter the market for a buy. It stays there for a while, and then it pops again. So this is a trade that we basically did. So you can use it for finding support. You can also use it in order to find resistance. So this is probably, yeah, if you have to go back to March, where you can find resistance. So, for example, here, this is the beginning of the coronavirus. Hedge funds and banks, everybody starts selling the stocks, and it falls first of all down to this level, which is a drop of 21%. And after that, it starts to rally. We're trading underneath the moving averages now. They're no longer supportive. They are acting as resistant. So when we get to the 40 and the 20 exponential moving average and the 50 just above, this was a sign that you could enter this market for a short. So instead of acting as a support, as it is doing right now, is acting as resistant in this area. So there's not a lot of examples here, but that is technically how the moving averages work. So the question probably is often get when to enter the market, and should you enter the market right here? And the answer is no, not really. Sometimes you can, if you put a stop loss above, but the best time to enter the market, for example here, when we rally up towards the 20 exponential moving average, is to enter the market when the price gets just below this candlestick here. So that's not a very good example of that. This one is much better. So we rally here, get to the top, and then next day we start breaking down. So this is actually where you're supposed to enter the market for a short if you wanted to enter a short. The same goes for the upside. This is the bottom. You should have entered the market roughly here because this is a very clear sign that we're not going back down to these levels and that we are going to continue far, far beyond this level. Yes, so we can go to the technical scan. So everybody that hasn't seen these presentations before, I have my method of scanning the market in order to find the best stocks out there, the ones that are overstretched, either to the upside, overbought, significantly overbought, or significantly oversold. And the way you can do that is basically to write your own code. I based my code at the moment on the Bollinger Band, so stocks that are breaking way below their normal price level, or way below, for example, the bottom of the Bollinger Band. So I have made my scan here, and I can choose what market I could go in. I could go to the Forex exchange. I can look at the companies, the 100 companies on the NASDAQ, or the S&P 500, or the Dow Jones. So if I go to the NASDAQ, it will scan and it will find 5 companies that at the moment are in this criteria. So we look at the first one. So you can see that the scan shows that we are trading underneath the Bollinger Band here, and usually that means that this is a stock that is oversold and that usually has a very low RSI, which is also another indicator that it is fairly oversold. So this is XL and X. Don't know this company, doesn't really matter either. I technically just look at the criteria and then I estimate where is this company and where has it been, where is it most likely going to go. So this is a company that has also been trending all the way since when the market bottom in March last year. So it has rallied to the high here of roughly 123%. It has broken down now roughly 15%, and it is just hovering just above the green moving average here, which is the 100 moving average. So you could enter this market now, or you could wait. If you were to enter this market, I would target these previous highs, roughly at 154, and then I would have a stop loss underneath the 50 moving average. So difference between here, roughly $24, and to the downside, that's around $5. So there is quite a nice trade to be made here. Question is whether or not this stock will turn around on Monday or now or so on. I would probably wait until it tests the 100 moving average, because then we'll get all the way down to $127, and then we'll see whether or not how supportive that that moving average is. So we can look at the next one. That is MDL set, and this is even better traded than the other one. So this one has fallen all the way from the highs here down to the lows here of roughly 8.4%. And you can see here in the Bollinger Band, we are significantly outside of the parameters of the Bollinger Band. You can see the RSI here is at 32, and underneath 30 is sign of being significantly overbought. Things that I have on RSI that is under 30, that is a warning sign that you should not start selling this stock. It is a stock that will most likely bounce. So it is looking interesting. We are overstretched, we're on the edge of being oversold, and we're hovering just above this blue line here, blue-green line, which is the 300 moving average. And usually stocks react very, very positively when they get close to the 300 moving average. We can probably see it here. Here it breaks the 300 moving average and then rallies, but usually that is the case. So if I were to enter a buy on this stock, I would have a stop loss right underneath the 300 moving average, and then I would have take profit here at the $60 range. So the third one on the list here, that is in this criteria, you can see that we are getting way outside of the Bollinger Band. Wait one sec. We are getting way outside of the Bollinger Band here, and this is a sign that we are well ready to go back towards at least the middle of the Bollinger Band, which is the 20 moving average. We are significantly oversold in this area here. We are at 25 in the RSI, and that is way below 30. So we should expect this stock to rally at any point. So this is MAR, yes, and we are just hovering just above the 100 moving average. So a stock like this one, I would, if you wanted to enter a buy position in this one, I would put the stop loss right underneath the 100 moving average, and then I would target these previous highs. So this is a move of roughly 17%. So a fairly good trade. So all of these trades are significantly oversold, they are overstretched, and that is something that you can take advantage of. Buying stocks when they are basically at the top, for example here, that is not what you're supposed to do. You're supposed to do what, for example, is happening today when things are pulling back significantly, and then take advantage of those stocks. So we can look at some of the stocks that I basically bought previously, and they are in the S&P 500, and I can show you why I bought into those stocks. So I do my scan for the S&P 500. There are even more stocks now here than the last time I did my scan. Here we can see that we have 32 stocks of 500 that have this criteria. First one here, under, and then we have BA is Boeing. It is also right under, is right above the 50 moving average. So application is called the TC2000. So there is a free version for TC2000 where you do not have the main data, or not live data. So you can buy different kinds of packages from TC2000. The full package is. Yes, now we are back. Thank you very much. So we were looking at Walmart. Yes. So hopefully everybody, sorry about that. I was still really bad connection for some reason or another. OBS is not working properly at the moment. I probably have some bad installation at the moment. But for example, Walmart, fantastic company. It will always be in. You just answer the question that is on Patreon. Just go on Google and write TC2000 download, and you'll get straight into that platform. It is really, really, really easy in order to install it. There are guidelines also on YouTube how to make your setup, but there is a default setup when you basically install the program. So, hope you answered your question. But you can see here, the reason why I entered a buy in Walmart, for example, is that we are way, way, way outside of the Bollinger Band, and we are on the edge of being oversold, and we are just above the orange pink line here, which is the 150 moving average. And the last time we tested a 150 moving average was way back here in July. So back then it was significant support, and that's why I also expect it right now to be significant support. So therefore, I expect this to bounce from the 150 moving average. I put a stop loss right underneath the 150, and we are targeted $153. So this is a fairly nice trade of around 9% to the upside. It will take a few weeks, but this is a stock that is a solid company and should do really, really well. So the next one was waste management. Waste management. So also here we were outside of the bullish band when I entered the trade. We have a high here of $125 for the share, and well, this stock is basically ticking all the right boxes. It's a fantastic company. It will not go bankrupt ever. Everybody basically needs to get rid of their trash, and that's what this company basically does. It will also benefit within this area, this period, the Biden period, because this is a company that it is basically a very green company, and that is basically their logo. And it is basically touched the yellow line here, which is a 200 moving average, and then bounce from there. So it is significantly oversold. It's a 19 in RSI. It's breaking below the Bollinger Band here, and we are at major support here in the moving averages. So that's the reason why I entered this stock. This should be a solid stock for the next probably 3 to 4 weeks. It should break at least above the 50 moving average in the next coming days, or test them, and that is a move of 6% to the upside. All the way up to here is 13%. So a fairly good trade, and I'm pretty sure that we will not go lower than this. I would be really surprised if we went under this area. And then we have Apple. So Apple has rallied the last few, basically, since the midst of January, all the way up to these very highs here of 134, and since then we have broken down. So even though they had their massive earnings coming out yesterday, I think, they still went belly up in their stock. And the main reason for that is because they were very, very overstretched before the earnings came out. So it was very strange that you have $111 billion in in your profit. I think it was that number, and then your stock just tumbles roughly around 10%. That is very strange. But the reason why I entered Apple is because the 40 exponential average has been major support. So I took the chance here. The 20 and the 40, that's basically been the two moving averages that Apple has bounced from. And I put the stop loss right underneath the 50 because even though if it breaks the 40, I'm pretty sure it will not break the 50. And then target of these highs. So this is a move of roughly, give or take, 11.5%. Yes. And the last one I made buying was AMD, Advanced Micro Devices. I have bought this stock before, and the reason why I buy it now is because, well, the same reason why, for example, all the other stocks, we are overstretched here in the Bollinger Band. We are testing the 100 moving average, which has been major support in the past. You can see right there. It touched the 100 moving average and then rallied. So the last time we touched the 100 moving average, we basically rallied roughly 32%. So that is the reason why I entered this market. I'm quite certain that in the end of this session, we will see this pullback above the 100 moving average. Otherwise, I put the stop loss around 83 and basically was based on these support levels here. So if you look at other technical indicators for the RSI, we are on the edge of being oversold. So we should see at least a pullback from here towards the 20 exponential moving average or the middle of the Bollinger Band, which is at 6.5%. So 5% to the upside. That is also a fairly good trade. Yes, you have any questions? So market is already pulling back. Some asked me about the GameStop and those stocks that have been rallying and so on. I usually just stay away from things that are just going parabolical. It's if you catch it in the beginning, then yes, and then you're extremely lucky and you can just follow the stream. But to enter a stock that is that parabolical, that moves in 50 to 100% a day and so on, it's just a recipe of losing money. The best way in order to minimize your risk is to look at major resist levels and major support levels. Moving averages are probably the best method to use in order to see where you have support levels and resistance levels. Just for instance, in this stock here, you have the 100 moving average as major support, and therefore next time we get close to the 100 moving average, you can technically estimate that this will most likely bounce again from the 100 moving average. So we'll just hope that it does that at this point. Yes. So So on Monday there is the next, and usually I have this before the U.S. market opens. I regularly do not have it at 7 p.m. In the afternoon. I usually have it before the U.S. market opens, so you basically do the analysis before the market opens, so you're prepared for the market. And on Monday I will do that. Um, we'll have a look at MACD first, and then we will have a look at the market as it looks with a scan, and then I'll basically put out the plan, basically what to look for and so on for foreign exchange, indices, and also stocks. And then we will also look at the news of the day, because I haven't added that to these online courses and live trades because, well, yes, I didn't really. I'm trying to build it as I basically go, but I will have a look at. We'll have a look at the economic calendar for the week, what basically to expect for the week, and so on. And that usually also helps to see where there most likely is going to be volatility and chances to enter a market and so on. Yes. Does anybody have any questions? I would expect a Monday major pullback, rally in the Nasdaq and the S&P 500 and most of these stocks that we have entered. So many of them are already in the green. For example, Waste Management is in the green, Apple is in the green, and Walmart is in green, and AMD is also not that far behind those. I expect a pullback rally at the end of the US session in this stock, so it goes above the moving average. And the S&P 500 and the Nasdaq, those will most likely as well pull back on or rally on Monday. So we can look at the S&P 500. So you can see that we have pierced the 100 now to the 50 moving average and are actually pulling back. And the reason why we did that is because we have reached the bottom of the Bollinger Band, and this is basically where you should enter the market. I am most likely going to make. I have made a signal, but for you that are basically on this line, this is a very good entry point for the S&P 500. You could put a stop loss right around 3,650, give or take, and your target would be roughly 4,000. So you can hold this for a really long time, and this is a move of roughly 7.4, roughly 7.7% to the upside. If you look at for example, you can also see where we're close to being oversold, and usually these indices don't get oversold. They rally when they get to those points. You can look at the Nasdaq as well. So we have fallen. We entered it here, especially where we entered. We have been testing the 40 exponential pullback from there, and we most likely will see a rally up towards these previous highs again on Monday. Otherwise, I put the stop loss fairly low in this market in order to make it basically safe. I didn't put it there. I put it roughly at 1216. You can see that around 700 there underneath the 40 exponential. Target here is 13,000 or 14,000 or give or take. So there is a fairly big move to the upside here of roughly 40,000 that is there. So a move of roughly 8.4%, that is what we are looking at. Market, there's a lot of fear in the market at the moment, and that's what the market is reacting on. We have been in a steady uptrend. We needed a pullback. We're seeing that pullback now, and it is not much different than this pullback towards the 40 exponential, and then we had this rally. So we'll see basically what happens, but I don't expect this to fall apart. If we fall lower, I'll probably change my my stop loss, because this should rally to the upside when everything is settled and done. So hope you found this helpful. You can welcome to ask me questions on Patreon if you have any questions about TC2000 and the scans and so on. Otherwise, good luck and good weekend.